Coming off the gains from 2024, many entered 2025 expecting limited upside, but upside may be even more limited following the recent rebound in equities as the tariff rhetoric cools. The federal funds futures market is pricing in fewer and fewer rate cuts from the Federal Reserve, and many are expecting inflation may remain sticky for the foreseeable future. Investors are increasingly turning to covered call ETFs for extra income. The high-yield income space has seen a lot of growth, gathering over $100 billion in inflows over the last 5 years. Roughly 99% of all derivative ETF assets are held in covered call ETFs. Covered call ETFs alone have gained over $80 billion in inflows since 2024, and another $15 billion was added to it in the first quarter of this year. Recent polling data shows that many investors were concerned with downside protection rather than missing out on any upside potential. And even if the U.S. economy skirts a technical recession, many people are expecting GDP to remain flat and growth to stay sluggish at best. Covered call ETFs are all about collecting cash premium from the options and cushioning the blow from the downside. This allows investors to take advantage of the unique view that equity markets will have both a floor and a ceiling. One fund benefiting from this mentality has been the actively managed S&P 500 High-Income ETF, SPY-I from NEOS. It's already attracted more than $1 billion in net inflows this year, which has pushed its total assets close to $4 billion. The fund uses a data-driven call option strategy written against the S&P 500 and generates tax-efficient monthly income for investors. JP Morgan has cornered the market with its Equity Premium Income ETF, known as JEPI. JEPI is now the world's largest active ETF, and so far it's netted $4 billion in 2025. JEPI is on a roll and has amassed inflows currently sitting at $40 billion in AUM. Both JEP-E as well as JEP-Q are also now listed on both the Canadian and U.S. stock market. The options available for high-yielding ETFs on the Canadian side seem to be endless as well, with funds like HYLD and HDIV now sitting at over $860 million and $695 million AUM respectively. HHIS from Harvest ETFs only just paid its first dividend out in March of this year, and it already has a massive AUM of nearly $400 million in just a few short months. Global X has recently introduced a Bitcoin covered call ETF that pays semi-monthly, and Hamilton ETFs is releasing zero DTE options ETFs, which they say will give income-focused investors a new way to generate higher and more frequent cash flow. I am curious about the more frequent cash flow part. On the U.S. side, weekly dividend income has been a thing for a while. Does this mean we are about to start seeing semi-monthly or weekly paying ETFs here in Canada? The bottom line is people are moving away from traditional mutual funds, bonds, single-stock dividend investments, and into diversified higher-yielding products that offer both steady incomes, the potential for long-term growth appreciation, and a diversified portfolio. The recent inflows over the last few years and the AUM of many of these popular ETFs tell a story that investors are looking for stable, reliable, high yields and easy-to-understand products that make sense in today's changing market. Investing for monthly income really makes sense. Almost everyone breaks down their budget into monthly segments, whether it's rent, groceries, utility bills, etc. So many expenses are fixed and monthly, so investing to have a certain amount of income each month really relieves stress for certain segments of life. And if you don't need all the income that month, the best part is you can reinvest the remainder or turn on drip to keep that dividend snowball rolling. That's the best part about these income-generating investments in my opinion. It gives you more options. In summary, enhanced income ETFs can capitalize on market conditions while protecting against potential downside by collecting options premiums. They offer higher yield opportunities for conservative investors, and they can also serve as a powerful diversifier for those with balanced portfolios. The strong demand for high income generation, lower volatility, and diversification will continue to fuel the income trend, and I don't see it slowing down anytime soon. Thanks for watching. If you enjoyed this video, do me a favor and hit that like button and subscribe for weekly videos. See you in the next one.